Dear students, welcome to E-Pathashala. I am Dr. Tahira from Gandhigram Rural Institute, going to teach a E-module or a E-lesson on budgeting. So let's now see what budgeting is. To start or to run a family or to run a life, everybody talks, it's a very common word, budget. So without making a budget or planning a budget, we cannot lead a successful life. So when it to a business operation, it is very important to know and understand about budgeting. Any food service institute that has to run successfully should have a plan of a budget for a successful business operation. So budget is nothing but an well planned financial statement for the year or the future to come. So we'll be talking about what is budgeting, what is the origin of the word budget, and what is the factors that you have to consider while planning a budget, what are the types of different budgets that is available, and how budget is important for running a food service institution. So all this will be covered in this e-module, and we will be trying to even you can exercise on your own about how to plan a budget for a running and food service institution. So there are different budgets and the factors that affect different types of budget. So while planning a budget, certain factors have to be kept in mind. So all this will be dealt in this e-module. So let's move on to why budget is important for a food service institution. So let's see the learning objectives that are being laid for this module. So to understand the term budget and its key components, know the various types of budgeting, plan different types of budgets, understand the factors affecting budgeting. So with these objectives, let us start our lesson by knowing what budget. Let us start our lesson by knowing what budget is. And as we know, a budget is a key component in a food service operation. Not only for a food service operation, for any industry or any business, a budget becomes a very key component. So well-planned budget is needed to help the management to run a successful business operation. Once there is some flaw in a budget, then the business cannot be run in a successful manner, or the goals and the aim of objectives of a business cannot be achieved. So now we'll go to understand the meaning of the term budget. When you're going to start a restaurant, first you have to think about budgeting and expenses. Budgeting includes employee overhead cost, another component cost. How do you plan a budget for a new business? So now let's discuss about that. So whenever we think of starting a business, so with reference to food service operations, let's think that we're going to start a restaurant. The first thing that comes into our mind is how much of money do we have and how much of expenses are going to be incurred for starting up a restaurant. So budgeting is the first thought when we think about starting a business is budget. So budgeting simply includes the employee, the overhead costs, the other cost components like the raw material cost, the machinery cost, and other costs. So now how do we plan a budget for a new business? So let's discuss about that. Budgeting is a course of preparing a comprehensive statement of financial results that are anticipated for a given time period in the future. So we start preparing a financial statement, and that financial statement tells us what we anticipate from this business in a period of time, maybe 1 year or 2 years or maybe even 6 months. It can be short term or long term budgets, anything it can be. So there are two key words in this statement. The first key word is anticipated. So that was what we're in comprehensive statement of financial results that are anticipated for a given time period in the future. So the first keyword is anticipated. Anticipated means something that is liable to happen, something that is going to happen. The second key word is the future, which is the time to come, what is going to come to us. So from an budgeting, we can understand that what financial results we are going to anticipate and what is going to be in future, or what holds for the future. So that is the simple meaning of budgeting. Now let's see the origin of budget. The word budget originated from the French word budge, which means a small bag of leather. So talking about the history of budget, the origin of the term budget, it's very interesting. In 1773, the Prime Minister of Britain brought along with him the documents related to a plan of expenditure for the year, and then the word budget was in use. So he brought these documents related to plan of expenditure, and he called them as budge, and that became the word budget, and that came into usage. So the very technical definition or a meaning of budget is quantitative term of a financial plan for a period of time. It may also include planned sales revenues, sales revenues meaning the income we get, resources that has to be persist for running up a business, fixed and operating cost, positions, liabilities and cash flows. It conveys tactics of business units and activities or events of an organization in quantifiable terms. A budget is the amount of money allocated for a specific purpose and the abstract of anticipated expenditures along with the plan to meet them. So this is how technically we can give the meaning of a budget. So it is a quantitative term of a financial plan for a period of time, and it tells, or in very simple words, it is the amount of money allocated for a specific purpose and the abstract of anticipated expenditures along with plan to meet them. Next we move on to the question, why is budget needed in a food service institution? For it, not only a food service institution, any business firm. So budget is a primary control in a food service operation. In a food service system model, budget is the most important external and internal control system. It is a sales tool for food service operations, and hence it is the most important for a food service institution. So without having a budget, we cannot run a food service operation, because it becomes the control sales, it becomes external as well as internal control system. So it becomes a primary control in a food service operation. So the menu, for example, in the beginning I told you we want to start a restaurant. What comes into our mind is the expenses, the resources that is required and others. All this we need the money, the financial background is very, very important. So not one for that, the first thing in a restaurant we should think about is the menu, which is a major determinant of the budget, and time management also depends upon whether the menu is an elaborate one or a simple menu. So we have many types of menu. Depending upon the organization, the menu also differs. So the menu becomes a major determinant of the budget. So depending upon the menu, the budget also keeps changing. If you're going to have an elaborate menu, then the budget increases. If you're going to have just a set menu or an table d'hote menu, then the budget is going to be different. So we know that all the managerial and operational functions of a food service, namely recruitment, raw materials, purchase, layout, equipment, menu and time management is governed by budget. So the prime factor in deciding a budget is a menu, the labor cost, that is the recruitments, and the raw materials. So we talked about the cost components in the beginning. So that budgeting is very, very important for a food service institution. Types of budget. So now let's know what are the different types of budgets that are. So budgets are of varied types and they are called as master budgets, operational budgets, cash flow budgets, financial budgets and static budgets. So now let's look at one by one. So first we will see what is a master budget. So master budget is a complete projection of how management expects to perform all features of business over the budget period, usually in a financial year. So when the term master itself clearly indicates it, it's a complete projection of how management expects to perform all features of business over the budget period, usually in a financial year. It is a review of the proposed activity by way of a cash budget, budgeted income statement, budgeted balance sheet. Master budgets include interconnected or interrelated budgets from different departments. So when you are talking about a restaurant, a star hotel or a dietary department or anything like that, there may be different departments. Stores, their budget for the year may be different. Production, the budget may be different. For service, the budget may be different. So when you talk about master budget, it is an interrelated budget from different departments. So when you say a master budget, it is a complete projection of how management expects to perform all features of a business over a budget period. Next is static budget. The static budget contains basics where expenditures remain unchanged with variations to sales volume. Overhead costs represent one type of static budget, but these budgets aren't restricted to traditional overhead expenses. Some departments may have a fixed amount of money to set in budget to spend, and it's up to the managers to make sure such amount are spent without going over budget. So the static budget is the basics where expenditures remain unchanged with variation to sales volume. So basic expenditures all will be covered in the static budget. It is something like the overhead cost and all that will be covered in these budget. And in some departments, as said, there is a fixed amount of money set in as budget to spend. So this is called as a static budget. So this condition occurs routinely in public and non-profit sectors where organizations or departments are funded largely by grants. So this static budget is usually in public and non-profit sectors where organizations or departments are funded largely by grants. They have a budget which is being given to one department's one fixed amount of money will be given. Then you call it as a static budget. So now we have seen about the different types of budget. Next is classification of budget. So budgets can be classified into three categories. They are according to time, according to function and according to flexibility. So now let's see about how they are classified according to time. So according to time, we have long time budget, short time budget, current budget and rolling budget. So these are the different budgets that we have according to time. So when we say it is long time budget, short time budget and current budget and rolling budget, long time may be for a period of time, maybe for more than 5 years or 1 year or 2 years. So then you call it as a long term budget. When it comes to short time budget, it may be for a period of as we saw earlier, maybe for a 1 month in operational budgets, how it's been broken down, that can be for a short time budget. Current budget may be the day-to-day one. Rolling is maybe for a cycling time they may have a budget. Then you call it as a rolling budget. So this is according to the time frame, the years or months or weeks or days. Then you call that as long time budget, short time budget, current budget and rolling budget. So according to function, how this budget is being classified. One is sales budget. This budget is the base for all other budgets and forecast on quantity of sales to be achieved in a particular time frame. So then next we have production budget. This involves planning the production level to understand what, when, how and where to produce. Then you call that as a production budget, right? So sales budget is a forecast on quantity of sales particular period of time. Production budget is, it involves the planning of production level and to understand and it answers many questions like what to produce, when to produce, how to produce, where to produce and all that. Then you call that as production budget. Next, cost of production budget. This budget deals with the cost of output planned for a period of time and includes labor, overhead and material cost budget. So this deals with the cost of output planned. What is going to be the output for a period of time, and this output in the production it includes all the three cost components like labor cost, overhead cost and material cost. When we put all that together and we have a thing, you call it as a cost of production budget. Purchase budget. This provides the information about the material to be purchased from the market during the budget period. So what is going to be the amount of material that you are going to purchase from a market for a period of time. So now this budget period may differ according to the time. If it's a long time budget or a short time budget or a current budget or a rolling budget, this purchase budget also may change accordingly. So on purchase budget, it gives us the information about the material to be purchased from the market during the budget period. Next is about personal budget. Personal budget, as the term indicates, it is a labor or the manpower that is required in running a business. So this gives the estimates about the requirement of labor to meet the production during a budget period. So then you call it as a personal budget. Next is R&D budget. R&D budget is nothing but research and development budget. This is the cost incurred during the budget period on research and development. So for example, you have a restaurant, they are bringing in new products, maybe some instant mixes or instant food items. So they have to undergo a lot of research. They have to undertake a lot of research and development activities. So when a small amount of budget is allocated from the total budget, then you call that as an R&D budget. Maybe the budget includes again the recruitment of researchers, then ingredient cost, material cost, maybe it is also the equipments that has to be purchased, etc. Then capital expenditure budget. This indicates on the acquisition of assets with reference to exchange, replacement, installation of machinery or renovation of building, etc. So when it comes to capital expenditure budget, it mainly talks about the fixed cost. Now we have some fixed assets. So those assets, maybe there's going to be a building renovation or a new machine has to be installed or an old machine has to be replaced or it has to be exchanged. Then those informations and those financial requirements will be put into a budget called as capital expenditure budget. Next we'll see what is cash budget. The budget gives the forecast of cash payments and receipts during the budget period. So whatever payments we have to receive, whatever payments we have to do or the payments that has to be received by the firm, all those budgeting is called as cash budget. Then master budget. The master budget is summary of all the functional budgets that is given as one report. Then you call it as a master budget. Maybe the budget which we talked earlier, cash budget, capital expenditure budget, R&D budget, production budget, purchase budget, all this will be put in together and the summary of all these functional budgets will be given as one report. Next is according to flexibility, we have fixed budget and flexible budget. When it's going to be fixed budget, this is defined as a budget which is designed to remain unaffected irrespective of the volume of production or income attained. Then you call it as a fixed budget. So this is a budget which is designed to remain unaffected irrespective of the volume of production or income attained. So you call that as a fixed. Whatever it is, you have to, if you're going to have a rented building, then you have to pay rent for it. So that's not going to be affected even if you're not going to produce or even if you are not going to get any income or if your income is very high, but it is in a fixed amount, then you call that as fixed budget. Next is flexible budget. So CIMA, an organization, defines this budget as one which, by recognizing the difference in behavior between fixed and variable cost in relation to fluctuations in output, turnover or other variable factors such as number of employees is designed to change appropriately with such fluctuations, then you call that as a flexible budget. Whereas in a fixed budget we saw that it is unaffected irrespective to the volume of production or income attained. Whereas in flexible budget it again it is flexible, that is the difference in behavior between the fixed and variable cost. Maybe the variable cost like turnover or the number of employees, maybe in one period of time we had more employees, other period of time the number of employees have been reduced. Then in that case the amount that we are going to spend in for this particular task will be reduced. Then you call that as a flexible budget. Next is we'll see about factors affecting budget. When preparing a budget, the following factors have to be considered. One is previous sales figures, economy, competitors' actions, and market research. So this has to be surely taken into consideration when we are going to plan a budget. So one is the previous sales figure. So what has been the previous sales figure? What was the total sales turnover or the revenue that we received from the sales the previous year? What is the financial position of the firm or the industry or the food service operation? What was the competitors' action? And next, the market research. How much of the goods are being liked by the customers? What is the clientele's response to all this? So everything has to be considered while we are going to prepare an budget. So these are the factors that we have to consider while preparing a budget. And also the government legislations. What is the like the tax that has to be paid, the service tax that has to be levied on the customers, or the other taxes that the institution has to pay to the government officials. So all this has to be considered while planning for a budget. If we are not going to consider these factors, then the budgeting will be of it cannot be a realistic one. It will be more a dramatic budget. So budgeting is very important in running a food service operation. We have come to the end of this e-module on budgeting. To summarize, budget is an important tool and is a center point of all activities in a food service operation, which aids in efficient management. Depending on the type of establishment, the type of budget can vary. The factors to be borne in mind while constructing the budget are the production capability, food cost, type of services, the menu that is going to be followed in an institute, the technologies that is going to be used in preparing the food products, or how the sale of the product, the services that is going to be rendered. All this has to be included in finalizing a budget or constructing a budget of a institute. And in turn, the overhead, the main components of a budget cost will be the raw material cost, the overhead cost, and the labor cost that has to be taken into consideration. So finally, I want to finish by saying that a good design or a good budget design speaks well about the institution or an organization.